The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
According to the annual retirement survey from BMO, Canadians estimate they need an average of 1.7 million to retire comfortably.
Despite setting higher retirement goals, many Canadians remain unsure they will ever reach them. More than a third of the respondents at 36% say that they're unlikely to meet their savings targets, an increase from 29% earlier. Welcome to episode 79 of the Canadian Mortgage Show. Alex Pang here alongside Alex Shanks. Alex, how are you doing?
Doing pretty good. We're recording on a Friday. It's during the day, and I mean the sun is out. I think we all, if people were in BC, we got some snow this week, which was a little bit wild. Waking up and be like, oh shit, there's snow on the ground.
You know, I've been long waiting for spring and realizing out here in the wet coast, we didn't have much snow at all that stuck this winter. So we're already looking ahead to spring. I've already thought about taking off my snow tires. Then my wife's like, nope, hold your horses. Take a look. There's snow. I mean, nothing stuck, but I'm like, come on, man.
It was nice. It happened on my youngest son's third birthday. It happened on that day, and he's like, the snow came for me. The snow is for me, is what he thought. So that was fun that way though.
Well, happy birthday to you, man. Did you have a lot of people out? Did you go to like
We had a family birthday with one set of family. My mom's birthday was also 2 days before that, so we had her birthday. We then had another family birthday for a bunch of people's birthdays that got missed from pretty much January till March, and so it was a birthday filled weekend.
Awesome. So we have a jam-packed show. We need to dive into this. You want to lead us
Oh
in?
my God. And I mean, we talked a little bit about it last week with all the stuff that was going on out east here and everything. And I mean, it's not stopping. I mean, Trump said the war was over, and everything dropped. What we're going to talk about here is like bonds and what's going to happen with interest rates. And I mean, it was pretty wild. They skyrocketed, and then Trump was like, the war is over. They went back down, and then everyone's like, the war's not over. We're still doing everything that you said that we're not going to do. They put the certain person they want in power, and so it's been a wild ride.
Yeah, I mean, haven't really followed exactly what's happening on the ground there with with Iran and everything, but I can totally comment on what's happening back home. I mean, since it started 2 weeks ago, gas prices are up 20 cents a liter. Now on our end, we're worried about interest rates. Up until this whole geopolitical event, the economy was kind of trending down, which is not good for people with jobs and all that stuff, but it was good for interest rates. I'm like, okay, this is kind of honing in on my narrative that there might be possibility of rate cuts. Well, here comes a outside force called the war in Iran. Hold my beer. And all of a sudden, bond yields, the war happens, bond yields are up, 40 basis points since 2 weeks ago. Now, last time I checked this morning, it's around 303, 302, something like that.
Yeah, again, it went like, it was up in 3%, it went down a little bit. And again, like we had a little bit like earlier in like December and January, we had the same thing where the job reports came out from November, the economy is looking amazing, and the bonds skyrocketed up above 3%. We started getting fixed rates around 4.14, 4.24, and it's like, damn. And then of course that wasn't true, what pretty much Alex and I said. These job reports are not true. There's not these jobs out there. And so it went back down, and it probably would have stayed down. But when you bring in anything to do with oil and fuel, and this is where my spidey senses like get pretty tingly with what's going to happen. Even we're going to talk about it down here. It's not great. Like our economy is not great. Even if this wasn't happening, our economy is not great. And that would lead to like, hey, rates would maybe go lower. The problem now is with oil and fuel is our costs are all going to go up and inflation is going to start increasing. And that's where the Bank of Canada is going to be stuck in a rock and a hard place here. They're going to be saying, hey, all the data is saying that we may need to cut the rates, but we can't.
Yeah, exactly. So, I mean, on the video side here, you can see the graph that we just we shared with you. Bond yields just spiked the last 2 weeks. Now, on the mortgage side, we haven't seen any lenders increase rates yet. but we know that's changing this next week. So both Alex and I, we've been contacting our existing client base. Remember that window we talked about locking in to a fix from variable? Might be an opportunity to ask your bank or your lender what the
The
lock-in rate
problem is
was.
I sent out last week, like early last week, about 100 emails to people, and about 15 people have actually responded and are doing it. And that's, I'll tell you this, people, the hardest thing about this job is you tell people to do stuff, but if they don't do it, I can't help you. And so that's where, for one thing, I like about this is at least we can get out to masses, tell people. And so I had a lot of people reach out. It was such a wild area from like what the lock-in rate would be of like some people got offered 4%, some people got offered like 4.6. And that's where like to me it's not, those were not numbers that were like, hey, we need to lock in today. If we were going to be under 4%, to me it would have been like, hey, I like those numbers, but we need to watch it. It's also, we don't want to be chasing the dragon. If we go back to 2022, what happened is that variable is way low. Fixed in most cases were quite a bit higher, like 1% to 2% higher. So everyone's like, hey, we can keep waiting. We can keep waiting. We have that data now. And if we see inflation going up, we can't wait that long. It's like, hey, we have to lock in quicker. And so something we need to watch. I don't think like with bonds up, I don't think it's an ideal time to lock in because fixed rates are going to be higher. But again, when is the right time? What if fixed rates just keep going up and up?
Yeah, I mean, the same thing that happened to me too. Some clients, I sent out about 50 emails and good like 5, 10 people got back to me. And I told them to do the same thing, contact the lender. Yeah, the rates offered aren't that great. They're ranging between 4.2 to 4.5. So based on that, I'm like, maybe we just hang on for a bit because just like we were talking about with what happened during COVID, um, I'm hoping this war is not going to last. Like this spike might be temporary. I'm just reading the news here that the war could last anywhere from 4 to 6 weeks. I'm hoping it be within that window of hopefully less. I mean, it all depends on Trump whether he's going to
Well, in like
pull the armies out or not.
the oil, they're all trying to flood them. They're trying to get more oil out there to keep the prices down on fuel. But I mean, like in like here, we're up 20 cents. I think in the States, in some places, they're up 40%, like 40 cents and well, gallons and everything for them. But like these are not small increases, and it's going to bring the cost of goods up, food, everything is going to start going up. And I mean, I know FedEx has already started adding surcharges, and it's such a wild time. I mean, when we had all that stuff happen with Ukraine, but we also had that shipping container that got stuck in the exact same strait that the oil can't flow through here right now. So it's like, it's, you never want to get into conspiracy theorists here, but is it like, well, are they doing this to say that this is what's going on with the economy and they're going to adjust things, increase prices? And that's where it just something, it needs to be watched. It's not something to stick our head in the sand right now and say, oh, it's going to be okay.
I heard one conspiracy theorist say, or it could be some from some House of Cards show, is nothing helps stimulate the economy like a good old war. Yeah, I don't know if that's true or, like any politicians out there that can kind of agree those kind of things. But, this kind of shines a light again on not focusing all our, oil through the Middle East. We have it in Alberta. Why can't we do, like more and more things happen that keep pointing back towards not relying on, imports or exports. And we have the resources. Can we just not get over ourselves and trip over ourselves to do that? I mean, I'm beating a
We're
dead
so
horse
far,
here.
man. We're so far behind.
I
It's
know.
not something. It's not like not like we could say, hey, let's redo this and we'll have
Yeah.
something ready in the air. Like we're
Yeah. It's another highlight that kind of shows like here's more evidence on why we need to use our own resources. I mean,
I saw another one, also a political post saying that the world, like everyone that's all eco and say that, hey, the world, we don't need oil. Like that's not what runs the world. This is a straight up showing that oil runs this world. Like that is the truth on everything. And that is not going to stop here until everything can be completely changed. But even these boats that are transporting everything, like our goods, like this is where we need to find smarter ways for us as Canadians to get the flow of everything. And that's why maybe we should start going in and investing in this infrastructure. Everyone's thoughts in the past were like, well, we got to go green. We got to go green. It's like, we need to go green, but we also need to make sure that we also can survive.
yeah, I mean, I was looking at some of the maps on social where the Strait of what's it called, Strait of Hormuz or Hormuz, whatever it is,
Mhm.
where they're essentially blocking all the tankers from going through. And some people were like, why don't you just build a canal that just cuts through or just goes right through and gets past it? So, I mean, yeah, this kind of goes to show really like, is the war in Ukraine really the war in Ukraine, or sorry, war in Iran, or is it really an oil play like how Trump might have played it off in Venezuela?
I mean, this has
So
been going. They again, this is all saying that they have nuclear weapons. I mean, you see videos on social media since like 1982. Everything the U.S. they're going to have nuclear weapons within the next 2 weeks if we don't go and get it. And this has been happening for like 35 years. And again, like what I mean, it's pretty wild. Like seeing the stuff. Like I don't agree, and I don't know enough about the political stuff there, so I don't want to touch. And is Iran correct with what they're trying to do? Is Israel right? Like there's so much stuff, but again, people are killing people. That is wrong no matter what. Doesn't matter if you believe what you believe. Killing other people, there's no God, there's no power that can say that that is okay to do it.
yeah, 100%. We need to we need to bring the bus back into our housing pod here on the Mortgage Show. So, I mean, the next few things we're going to talk about will lead into the rates on where we think the Bank of Canada and rates are going to be. So, there's a piece of news that came out this morning on a Friday here, Friday the 13th. Funny enough,
Yeah.
StatsCan says employment came in sharply lower than expected in February, as a surprise drop of 84,000 jobs pushed the unemployment rate up to 6.7%, up from 6.5. Now they were expecting a 10,000 gain, but these jobs, 100,000 of these jobs were full time work, and
Yeah, these are full time. Like
yeah,
these are not like, oh, just part-time jobs. Like these are like big jobs.
yep. And then the private sector fell by 73,000. So this kind of, you know, it's kind of tells us exactly where the economy is. I've even saw stuff on social too, like Amazon is laying off a bunch more people too, like getting them to build up their AI systems. Once it's constructed, then they lay them off. It's like you're building the systems to make yourselves redundant, and that will take over your job. So, um, yeah,
And this is where I mean, this is where if the stuff out east wasn't happening, Alex's narrative of rates potentially going lower, like if this was only news, I would put money on it with Alex that hey, rates are going to go lower on the variable side. Again, this is variable rate mortgages, not fixed rates. Fixed rates ain't going lower until bonds go down. But with this, even though looks really bad and our economy is not doing good, I do not see the Bank of Canada cutting at all. The only thing is it means there was some reports saying that they were going to be increasing in the next like 6 months to a year. Like that's just getting pushed out, pushed out.
yeah. I mean, there's this term that's kind of floating around now on social called stagflation. So, I mean, Alex and I both talk about it. We've been talking about it for months now. Now, based on economic news, the Bank of Canada should be cutting interest rates. If you forget about this war, they should be, right? Based on everything that's happening, they should be to stimulate the economy. But an outside force comes in, the war in Iran happens, and it causes inflation. Inflation in oil, inflation in food prices, and so on. Now, like even the Bank of Canada warned that it's possible to raise rates when there's a hyperinflation environment, even though the economy is not doing so well. This is a kind of the perfect example. But the likelihood of them doing it is probably not going to happen. So it's kind of like two opposite forces are combating each other, which the overwhelming majority of the economists think that next week there's not going to be any either cut or rise. It'll just stay the same. So I mean, both scenarios are possible. Likely, it's just going to be cut. Now, I even said, hopefully, this war in Iran will be over soon, so bond yields can come back down. We can come back into the whole economy's crap. Let's cut rates thing. But in the meantime, it's kind of like this artificial forces propping up the boat essentially for the
Yeah,
economy.
and that's they're like I said at the start of they're a rock and a hard place like that. There is no denying that. And again, it's the next rate announcement is going to be next week. So I mean, we're going to get to see what they're saying and everything. So there'll be some good warning of like, do they say that rates could go up or do we think that rates could go down? It's stuff that's going to give us more data to be better prepared. But again, it's just watching oil. That is pretty much what all we are going to be paying attention to right now.
Yeah, 100%.
But we did some good news finally for first time home buyers maybe is that Canada's 50,000 GST rebate that they kind of talked about is finally actually cleared Senate. Like, oh my God, has it actually been in, no, not a year yet. It was May that they actually like brought it in. So hey, they've got it set up maybe before a year, but it was almost a year ago that they said, hey, this is what's going to happen, everyone. And if your contract says after May 1st you're going to get this, no one's got money. And this is where, how long is this going to take for people to get some of these rebates that have already bought them? They are meant to get them. It's going to be honestly like a shit show. And are the lawyers going to do it for free? Are they going to go back and do this stuff? No, probably not. They're going to say, hey, you got to pay me some money. Like it's kind of wild.
Yeah, I mean, I'm still on this rant here that it should be an exemption, not a rebate. Like
Oh,
you're
100%.
you're wasting CRA resources having people like staffing a department to do this when it could be just done at the lawyer's office, like a property transfer tax exemption. Now it's a provincial thing, but it's done at the lawyer office. Like, like productivity is not it's not the priority of the government, to be honest. It's almost like, oh, we need to kind of fulfill what we promised, and this is the biggest thing that if we don't fulfill, then heads are gonna roll, kind of thing. So I mean, but it's good that they're actually doing it. Better to be an exemption than a rebate, but I digress.
I'm going to let you talk about this other one, Alex. And I'll tell you, I've talked to about 5 people today, and I'm like, we've been talking about this forever.
Okay, so you know how banks are kind of keeping the pre-sale market propped up a little bit by doing blanket appraisals. So I'm not going to name the banks. We know who they are. They're blue and they're green. All right, but we do business in them, so let's not blast them. All right, but major lenders, their OSFI, our banking regulator, they've been warning them about doing blanket appraisals amid the condo market crash. Now we're seeing it a lot more in the GTA, less so in Vancouver, but the two main municipalities that are seeing a huge crash, where people were buying at 11 or 1200 a square foot, coming to completion now it's appraising at 950. People don't have money, and rather than the developer losing, like defaulting on a $400 million construction loan, it looks like banks are more okay with doing a blanket appraisal, saying the value is what people paid for it. So people are end up having to finance at 100% loan to value. And so OSFI is actually warning them, are giving a stern talking to, that they're going to violate the Bank Act. Do you think it's going to make a difference, or is it just going to keep going on?
At the moment, again, it depends on, now this is where one thing that has come out a day ago is that there's a massive investment firm that aims to turn like almost 2,200 like condos that have not sold into rental units. They're going to inject like $1.2 billion, 1.3 billion of a fund to buy these. And so maybe the banks are calling some people, say, hey, you know what, our blanket appraisals, they're not going to let us keep doing that. We got to get these condos on the rental market. Like, that's where some of these, they may have like $1 billion like commercial loan out. It is less likely they would rather that number stay good than be like, hey, you know what, we're underwater on like 100 units for a condo. And that's where, again, this is something that they've always done, but usually it was for, hey, increase values, just made it easier. They'll do one appraisal and say, hey, it's good, so that it saved the client some money. And that works great in an increasing a home price market. But we're in the down one, and someone probably was like, hey, you know what, we actually can still get this through. And that's where I bet you some banks are going to say no. We even saw it when like rates increased. Some banks have like allowed people to keep paying interest and not change their amortizations, where some banks are like, no, we got to bring that down. And it's also like the way that their books are set up. Are they in more risky investments? Are they allowed to be investing that amount? Like, the banks have different buckets of how they do it. And that's where, if they start to dry up for those funds, then they might say, ooh, we can't do this anymore.
Yeah, I think this warning is just going to fall by the wayside. They're going to continue doing it until they receive a hefty fine, like how TD got $1 billion fine from the States for facilitating money laundering. I mean, from a bank perspective, they'd rather have several individual mortgages. They'd rather have $401 million mortgages that close and some of them default, versus one big $400 million commercial loan default. So I guess this is a spread the risk kind of thing that the bank is seeing. Now, obviously, it violates the Bank Act, but I can see why the banks.
Yeah, and that's like, again, I mean, they know, and we all know, and can't, like, even they would rather these people close on it because they know that people are going to do everything they can to pay their mortgages. Like our default rate, let's say it even goes up. We're well below 0.2% on a default rate. The US is 4.5%. That's their average. And so they're like, hey, as long as we get these people to close, we know they're going to do everything they can to keep paying their mortgages. And so in their eyes, and that's probably what they would show to like the courts as well. Say, hey, yes, we're underwater here. And again, a lot of these, like the big reason why these are coming in is like someone that's doing an uninsured mortgage. They had a 20% down payment. Banks can usually only do a value of 80%. Now you can always switch it to an insured mortgage if there's other issues, and then the insurer's on the hook. That's where I think like this would get really sketchy if the insurers started to have to be on the hook for these, but these are the banks taking the risk on them. So it's kind of like, hey, maybe they'll have to put more money aside, which they've been loading up billions of dollars for default risk that way. And so I don't think it's like something to be like scared of, but it's again, it's how the banks are still making sure stuff is at least staying afloat a little bit.
Yeah, this is essentially like more of a case where the banks are just kicking the can down the road, just hoping values will increase, and we're just gonna put a band-aid solution for now, and hope that this whole collapse doesn't really happen. Like, it really is just a house of cards, to be honest.
Yeah, no, exactly. Now hopefully another win for some maybe smaller people is that this month the federal government is implementing a cap on the fee that Canadian banks can actually charge for their non-sufficient funds. NSF, I feel like, I mean, again, the banks, Equifax, all these companies just get to kind of get away with whatever they want, and they make money on, they know that they make money on it. Even like you see it, Alex, like when we pull people's credit, sometimes you may have a $10,000 credit card limit. But if you actually go above that, and many times cars will let you go above that, and that just destroys your credit. And sometimes people don't even know. They've never even been told because maybe they've just been paying the minimum payment. And guys, if you're at the limit, if you just keep making the minimum payment on your card, you're never gonna get it down, and you're actually gonna start going above. And that's where on these ones they get charged for some missed payments if they don't do it, and they're also getting dung on their credit. And so I mean, it's great and to say, hey, you know what, you're not going to get charged on this, but like it should have been done long ago. Like this would have been something so easy. Hey, you guys are charging $50 for missing a payment, and sometimes it's actually on them as well.
Yeah, I mean, right now, yeah, they're charging between $45 to $48 for NSF fees. Now, starting March the 12th, I mean, that was yesterday for us now. They're capping NSF fees at $10. Now, in addition to the cap, Canada will only allow a bank to charge one NSF fee per account over a course of 2 business days. So you can't get double dinged. Now, according to the Credit Counseling Society, this $10 cap on NSF fees could save Canadians $600 million a year. My goodness. Wow. So, like this kind of
Just
goes into the whole,
fine.
yeah, this kind of goes back to the whole banks aren't really there to give you advice. They're not really there for you. They say that they're there for you, but their actions say otherwise. They're there just to get your business, and they'll charge you left, right, and center for everything that they can.
Talking about renewals, Alex had a client today that is, I reached out to him. His renewal is like 2 months away. We'd followed up before, he never answered, so we followed up again. And he sent me photos of his like the paperwork that the company sent them. The average starting rate was 5.5% is what they offered for the renewal. That same bank, we deal with them, they're offering 4% rates. I'm like, oh my God. Call them. I said, call them. He's like, oh, this is crazy, Alex. Like, and I'm like, call them. As soon as he called them, oh yeah, no, we'll give you 4%. But they know at least 60% of people will just sign on the dotted line. They may wait till the very last minute and they just do it. And that's where these banks make money.
Yeah, they know that you're right. 60 to 75% of people are lazy. They just easy. They're just going to sign it, return it, and they know that based on the stats. They will play that. They will play the odds any game. It's almost like the house always wins. They're going to do this roulette game, and they'll deal with the ones who actually do their homework and research. And of course, for those of you who listen to this pod, we hope that you're on the other side that will do your research. As we advise you, shop around for your mortgage. Either do it yourself or have a mortgage broker do it for you.
It takes 5 minutes. I mean, that's again, like you can call out, you can call both of us. And even if we do not do your mortgage for you, we will spend 5 minutes, talk to you and say, hey, yes, what they are offering you is a good rate. Or, hey, you know what? We will write you an email to see if they can give you something better. It's 5 minutes of our time. We will do that for everyone. Obviously, don't call us and waste a lot of our time and then just be like, "Ooh, I'm going to go back to my other lender." Hey, be careful with our time, but we will help anyone.
Absolutely. Yeah. So, I mean, it's your money. I mean, I think on average, Canadians, I'm sure everyone in general too, they spend more time researching what they're going to do on vacation, you know, than their mortgage, because the mortgage is boring. And it's like, yeah, it's like, people, it's not exciting with people's budgets, but hey, on a vacation, you got to find ways to save money, get these deals and, redeem your points to do all this. And then, all that. I mean, folks, spend more time on your budget and
Save your money on your
finances.
mortgage. Take the time on your mortgage and save a couple $1,000s there and use that money instead of and that's I'm different than the average person. I use my credit card only for business and high purchase stuff. I don't use it for everything. And that's just the way that my brain works. Yes, am I missing out on points? Maybe. But I also it mentally is easier for me. Is people that think they're getting all these points, 95% of people are spending more money than the points they're getting.
Yeah, 100%. And that's how people get into debt. Just for the sake of points, you get into debt. You don't pay off what you use.
Yep.
I recently refinanced myself, so am trying to fight the natural urge to buy something. Like I need to replace my phone, and the phone I want is going to cost $2,500 to $3,000. I'm like, oh, I really want it.
You can't do that. Oh,
Exactly.
hold on.
I could
Hold on.
easily,
You're going next fall.
exactly. I could easily charge my card like that. But that's going to bring me back to that cycle that I've been on several times again. I'm like, yeah, that wasn't fun times. Like, unless you don't have the money, you ain't going to pay that off. And it's just going to keep going up and up. And you're going to be back on this wheel again. And I've been on this wheel too many times. I'm like, I don't want to do it anymore. So
Yeah.
now, I was doing research. I'm like, never buy a phone. Sorry to go on a rant here. If you're looking for a new phone, don't buy it on release date, because the release date you're paying full price. There's not going to be any discount. Usually the sweet spot is 3 to 6 months after the initial release, because that's when the initial hoopla of it and it's no longer new anymore. Then there's going to be discounts, whether it be iPhone, Samsung, whatever phone that you're buying. The discounts you get better discounts over time. So I may be preaching to the choir. I'm speaking to myself. I'm like, my phone is being released on the 17th. I'm like, if I buy today, it's $3,000, but if I could wait a couple months, it could be 25 or whatever. And like, and my birthday's coming up. Maybe I could use birthday money to pay for my phone.
I'm going. I mean, I have Apple Care, and my phone is kind of shitting the bed. It might break, it might fall, and I need to get it replaced that way. But like, I don't need a new phone. It's like I just need it to work. I need the battery not to die on me all the time, which that ends up happening. But yeah, I don't really look at phones anymore. I used to like definitely look at phones that way. I was like, I want the newest and exciting thing. I use it to text and to make phone calls.
Yeah, me too. I mean, the phone I want is definitely a gimmick. It's definitely breaching the want versus need category, but I'm trying to convince the want is a need. So I'm like, all right, I gotta really fight this because I don't want to be back on the same debt cycle that I used to be on. So I mean,
Let's talk about debt cycle and what you need to actually to retire in Canada. I've been looking at fire. I love my job, but some days it's been stressful sometimes. Like, what number do I need just to go on fire? And what everyone knows is financial independent, like earlier that way. And that's where I'm like, what number do I need? And I mean, this is this is a pretty crazy number. According to the annual retirement survey from BMO, Canadians estimate they need an average of 1.7 million to retire comfortably. That is up sharply from last year at 1.54, which is a large number that way. And in BC, residents say they need about 2.2 million to retire. Now, if I am going to be retiring, I'm going somewhere else. And I mean, other countries, you definitely don't need that amount of money to retire on. It just obviously, if you want to keep living your lifestyle, and a lot of these things is like, hey, if you spend 150K a year, well, you probably need 2.2 million, even if you go with the 4% rule of your draw out. Well, that's why you need that amount. And so this is where a lot of these things stats are sometimes it's also leaving money on the table. Like there's a couple different things is, well, are we leaving money to kids? Well, then, hey, you need to make sure you have enough that you get to live the life you have and leave money. Or there might be where like, I'm not leaving anything to my kids and I'm spending everything, which means you're going to need less.
yeah, I mean, I bet you this number doesn't take into account where likely, especially in BC and Ontario, where we're going to have to help our kids with their down payments, before we pass, to help them get in the property ladder. Now, like, it's not surprising here. Ontario follows at 1.9 million. Hell, I mean, just think of it. BC and Ontario. Let's forget about the island, Alex. Um, a decent house, that whatever is, it's about $2 million, and $1.5–2 million. Now, the rest of Canada, I know you guys will be like, $2 million, you can freaking buy an estate or a mansion. Yes. Lower Mainland, GTA, you'll probably buy something that's honestly not that special. It's just a regular house. But yeah, that's really according to housing prices. Now, if we want to talk about the rest of the country, Alberta, they put their retirement goal at 1.66 million. Now, of course, the lower cost provinces like Saskatchewan, Manitoba, they are needing closer to 1.28 million. Quebec residents, 1.24. And of course, Atlantic Canada, with the lower cost of living there, approximately 928,000, which 928,000, Alex, great. It won't even buy us a house. It might buy us a 2-bedroom condo in the Lower Mainland and GTA. Now, despite setting higher retirement goals, many Canadians remain unsure they will ever reach them. More than a third of the respondents, at 36%, say that they're unlikely to meet their savings targets, an increase from 29% earlier. So when financial planners often recommend setting aside 10% of income for retirement, the survey found that only 28% of Canadians save less than 5%. I mean, it kind of goes to saying that life is expensive in Canada, and people probably don't even have room to save any money. And 38% save between 5 to 10%, and 21% save more than the recommended threshold. So there are savers out there, but they're also, especially, I would kind of veer towards those in the GTA and Lower Mainland, probably save less than the recommended.
Yeah, and that's, I mean, some people, and I mean, this is where people that are renting and why they sometimes get upset that, well, what if I'm paying $4,000 in rent? Why can't I own a place and pay for it? It's because there's other costs with owning a home. Your fridge might break, your roof might break. And that's where, like, most people, like, they don't have any extra money. And that's the big difference. And I mean, this is what a lot of people don't, no one's ever sat them for one and showed them compounding interest. Like, it is, everyone talks about, it's the eighth wonder of the world. That if you just put even $1 a day, if you could save up $1 a day for the next like 20 years or even 15, like, the amount of money you will have is crazy. And the sooner you do it, like Dave Ramsey always goes about, hey, if you're 20 years old, put $300 away a month. That's all you need to do. If you do that for 15 years and then let it sit for the next 30, you probably have 1.5 million. But that is because it's the initial charge of doing it. And they've even done studies. Hey, one person maybe only does $300 a month. And another person works and waits 10 years and then does like $1,000 a month. You are better off doing a lower amount of money up front. But again, it has to be done like quite early. You can't say, hey, I'm going to do $50 today at 30, and then think you're going to have a lot of money. It's, hey, at 20, if you did that, 10 years of that is going to compound. And that's where people just got to do it. Like, you just got to make it happen. You have to make an auto recurring savings account, or you'll say, oh, at the end of the year, I'll put some money aside. It won't happen.
Yeah. I mean, I'm teasing this here, but we have a guest coming on in the next couple of weeks. He talks about pay yourself first. And even like, no matter what, like starting a savings program, yeah, you're right. Alex said that if it's $50 a month, it ain't going to do anything, but something is better than nothing. So even if you do $100 a month, $50 a month, you put it aside, you live off the rest, or you force yourself to live off the rest. Because then if you wait,
yeah, and that's where, again, like $50 to 100, I get, it's like, well, should you do that, or should you just be trying to increase your income and actually like boost your income more? Like, that's where I see sometimes like, oh, I'm going to invest $100 and I'm going to become rich. Sorry to say, like, hey, saving $100, like, I applaud you for doing that. Like, that's amazing. But I'd put that into a different account and take like a course, learn something new that maybe cost you $2,500, and now maybe you'll make $10,000 extra a year. Like, that's how you're going to get ahead.
Yeah. Either save money, reduce your expenses, or make more money. But at the same time, when you make more money, you don't want to blow it all too. So it kind of goes hand in hand. Like, it doesn't have, like, both things can be right at the same time.
I think we talked about it once, Alex. I am lucky enough that the very first job I did other jobs, but I was 18 and I started as a commercial diver. The first time I ever worked, I made $10,000 in a month. And that was like, holy crap. I spent that $10,000 in a week, I think. I don't even know where that money went at the end of it. I think I had a brand new phone. After that, I was like, holy shit. And luckily I had that when I was 18. I learned from there, Alex, you have to put away, I used to put away 50% of my money. For one, when you're self-employed, you have taxes that you don't realize you have to pay and everything. And it's learning those problems first. And I've always kind of lived my life that way now of like made really good money. I changed jobs, made really good money, but I've always lived on that lower income, which is it's a very big benefit for me. I've never tried to live like on the extra lavish lifestyle.
You are a few, like you're one of a few people, Alex, because most people who make more money, their lifestyle goes up to what they're newly making. You can say the same thing about lawyers or doctors who make good money. And we
Oh, yeah.
see them too on the
So,
client end. They probably have the same amount of debt as much they're making. So they have a higher level of debt because they don't have that financial literacy. Maybe they're caught up in that lifestyle of, amongst their cohorts that they're making a lot of money. So they have to live that fancy lifestyle that goes with their vocation.
yeah, they call it lifestyle creep. And then I mean,
Yeah.
I now like I spend money a little bit freer than I used to, but again, it doesn't come out of my bank account on a credit card unless I know I have the money to pay it off. I'm never going to take debt. The only time I will take debt if I'm buying real estate. That is the only time that I'm going to use debt, and it has to be the leveraging to build myself better.
Yeah, 100%. Now we kind of veer off here. We segue into another thing here. The economy is not doing so well, and things that falls through the cracks or things that creep up are um, private lending, and we heard about that with the fraud cases and all that happening. But here's a subprime lender, Canadian subprime lender, Go Easy. It fell 50% of its, I guess, market valuation. The stock dropped 50% on guidance of surging loan defaults and write-offs. Now, it also suspended its dividend. Now, Go Easy, if you haven't heard of them, they do a lot of retail financing, auto financing and leasing. So your cars, your boats. Now, if normally you go through the banks, but if you don't get qualified with the banks,
Good credit,
yep,
bad credit.
you have
They,
bad
they
credit.
prey on they prey on the new immigrants as well. That's where I see a lot of people that have car loans and it's like 18%. I'm like, what the frick? And it's they prey on the new immigrants.
Yes, yes. So Go Easy, they borrow themselves at 6% and they turn around and lend at 20 to 40%. And oftentimes subprime lending is often the first to drop near the end of a credit cycle. So, those things like where they're lending out to like, fancy cars and boats and stuff, those are coming to roost now that the economy is kind of, teetering and going the way that we've always talked about.
No. Now, Rico has taken action on another brokerage. Every time I say Rico there, did you ever watch Sons of Anarchy there, Alex? Like, did
And
you ever
yeah,
watch that at all?
yeah.
I always, that's what I always just think of that stuff when we talk about Rico. Now, the Royal Key Brokerage and a broker named Rakesh Kumar counsel and assisted clients in preparing fake documents. License has been revoked. Now the tide is going out, and we're going to hear more of these. And this is like the truth. We know, I'm sorry to say, it happens a lot in Ontario. They're called Brampton mortgages. Surrey is another place. Like happens a lot there. But Ontario is a very large one. It's people that never should have qualified. Maybe they have the money to pay it, but for one, are they allowed to use it? Maybe it's coming from a company, a country, Iran. Maybe they can't use that money. So they go and doctor like these fake documents. Yes, they're paying the mortgages and stuff, but again, it's going to come out at some point.
Yeah. I mean, because of all these things, it's like the latest things that we hear every week. The Ontario Real Estate Association, OREA, they're going to start requiring annual filings, financial filings for the brokerages. So, of course, this is,
I'm very confused. I thought they would have already had to do that.
yeah, I
To
guess.
be honest, like I thought when you, I think I always thought when you have a trust account, which again, like when we refile our mortgage licenses, if you were dealing with trust, which we are allowed to do, if we want to handle private money, you have to prove what's going on in there. I mean, I feel like they've just been kind of saying, "Ooh, maybe send us like some statements." Where now it's like, "Hey, we actually have to look at this."
Yeah, I mean, this is in response to the fraud from iPro, Home Life, and SaveMax. I mean, Alex has said this before. Whenever there's fraud in our industry, it's the rotten apple spoils the lot. And what happens is more compliance for all of us. That's why more documents is required, more paperwork. So it's not as easy to get as a mortgage as it used to be. Now, for those if you got a mortgage, decades ago, it was a lot easier than today. It's like, oh my gosh, you want my left kidney? I'm like, yeah, you know what? Don't shoot the messenger because of all these things that have happened, and the layers get thicker and thicker, and these are the reasons why.
Oh, and I was helping a guy and we're doing a private mortgage, and even that, like, private lenders, and if you're going to like good people that are not like shark lenders, even the compliance that they need nowadays, because the government wants more proof of like, hey, where is these money coming from? They're like, Alex, I just want to borrow 200,000. I have this money. I just want it to be quick. It's like, we need this stuff. Like, it's not a you issue. This is what everyone needs, because there is bad apples that do wrong things.
Yeah, 100%. Now, the penalties and the fines don't end there. So on the mortgage side, Claire Drage, she's a longtime mortgage broker, probably decades ago. She was caught up in fraud. I mean, she defrauded $100 million of investor money.
I think it was like 300 million. Like, there
Okay.
was like, she was part of other thing. It was like Mark, but
Yeah.
her specific was like 100 million that way.
Yeah.
And yeah, she's fined 600K.
I doubt they'll collect it. I mean, she's probably already left the country. I mean, no investor is going to get their money back. We all know the money's all she probably filtered out offshore accounts. She's probably living in Thailand, like we said about White Lotus or whatever country, just to escape North America. I mean, this goes back home to saying white collar crime pays in Canada.
And this is where like people need to understand these were done with what's called promissory notes. This is where like Alex and myself, we could have said, hey guys, you can invest in the Canadian Mortgage Show. We're going to be starting our own real estate firm. But hey, we have nothing, we have no asset to give you. But hey, I'm going to give you a promissory note that, hey, if you lend me $100,000, I'm going to give it back to you in a year with like 20% interest. They have a little bit of legal to them, like of like, yeah, you're signing with a lawyer, but there's no asset to tie it to. And that's all these were done on promissory notes. And yes, some lenders used to use them because money was more freely available. Since money is dried up everywhere, this is where again the Ponzi scheme ended. She was paying certain people, getting money, paying certain people, getting money, paying certain people. It's the people at the end that get really screwed.
Yeah, I mean, this will only continue until they're actually tighten up white collar crime laws in Canada. So, I mean,
Well, actually, talking about that, Alex and I will never just. We've always get our TikTok, Alex. We always get people that are trying to copy us on there. Well, it's Instagram. I have someone trying to copy me on there. And people last week were messaging me, Alex, like, why is this? Like, did you make a new account or something? I'm like, no, no, no. And one person got a message, hey, I'm starting a crypto coin. People, I will never do that. So look at the name, make sure it's actually me or Alex. We will never message you about stuff unless you call us and say, hey, I want to talk about a mortgage. We will never message you.
yeah, 100%. Now our show is running a little long. Hopefully we can fit this in before the end of this pod here. We're just shifting out here towards things like we always talk about using our resources. Well, here's the thing that it's kind of this is embarrassing here. This is a couple weeks old now, but Eastern Canada receives their first shipment of an Australian LNG for the very first time. LNG. Don't we have that, Alex?
No, we don't do much of that here.
Like, so if you see the map here, in order for the LNG from Australia to travel to Eastern Canada, it needs to cross the Pacific, go around South America near, what was it, Chile on the bottom there, on the south there, and then make its way around South America to the eastern seaboard. Like,
Now, the only question, why I see this, but I understand why would they go through the Panama Canal is the one thing I don't understand. Like, why, like, that's where, and I mean, that's where I get like, is someone using this picture to say, whoa, look at this, and are they actually going to go through the Panama Canal? I mean, again, either still a massively long distance. We could ship this all right from Alberta and BC, where we have a lot of it, and if we had a pipeline, it would all just flow that way. But again, even if we had to actually say tanker it from BC around through Panama, it still would probably be better. At least we're using Canadian.
Yeah, I mean, like, my goodness. Yeah, whether it's through the Panama Canal or around South America, this is honestly embarrassing. I mean, this is the left hand not speaking to the right because Quebec says no. They don't want anything through there. So, I mean, Nova Scotia has 7 trillion cubic feet of natural gas, but instead of extracting it, they're ordering it from 26,000 kilometers away because they want to be green. Now,
Yeah.
and we talked about this a few weeks ago, it takes 19 years to approve a mine and, endless studies and red tape. I mean, no wonder our country is broke. And, even Alberta, the richest, resource province in Canada, they're running a $10 billion deficit. So
I mean, it's hard. Every province, and again, this is like, you have to remember, this is the way that like what we've done for late stage capitalism and the way that money flows. And like deficit is something that, like, yes, back in the day, maybe there was a surplus, especially in the Alberta like capital oil fund and everything. Having deficits, I don't think are going to be is not all that bad. But obviously these are just building, and they're never going to stop. And again, we have other ways to at least make it a little bit better. And again, we have to keep building hospitals, we have to keep upgrading schools. And right now, the only way that's going to come out and give payments is our taxes are going to increase. That's the only way it's going to happen.
yeah, we need to, I think as a country and all the provinces need to get on board for the good of Canadians rather than just look at ourselves amongst our own provincial things and just, we're a family, but it's like all the cousins and the brothers and the sisters and uncles are all squabbling because we can't be on the same page and nothing ever happens like a family dinner. So we all need to be on the same page. But you know what? We need to wrap up the show. But Alex, do you want to finish off? This is big news happening in Vancouver.
Yeah,
You
that's
want to
been
mention that?
BC. And I mean, and I'll say, and I'll go over this. I did see it, but so we obviously have the Government of Canada's landmark agreement recognizes the Musqueam First Nation Aboriginal title all of Metro Vancouver. Now, it means the federal government is formally acknowledging that Musqueam holds Aboriginal rights, including Aboriginal title on land within its traditional territory, and it's committing to work step by step how these rights we put into place. I'll have to go and find it, but I did see where I'm from in Comox, we have a really big Comox First Nation band here. They posted out saying like all these people that are freaking out is like, I mean, again, we can go look at Tawasin. Tawasin, like people didn't lose their land here. Like I want people to understand, like, hey, this is scary, but again, this is because the government is doing a horrible job explaining of what's actually happening. Like really what we're going back is saying, hey, yes, you know what? These were your guys' like land, and hey, we acknowledge that it's your land. They're not going to be taking the property away from it. It's just going to change. Instead of it being the Queen's land, it's going to be the Aboriginal land. Like that's really what's happening. But the government is just doing a horrible job explaining and calming people's emotions, is really
Yeah.
what's happening.
Yeah, here, the chief Wayne Sparrow from the Musqueam, he did say our approach to traditional unceded territory is one of partnership and relationship with our neighbors, not trying to take away our neighbors' private property. So their intention is not to do it. But like, if I have a moment here, I've been saying this to some people, like, there needs to be an end to this reconciliation. There needs to be
I'm
reconciled.
well here.
It can't go on
Like, yeah,
forever and ever more. Like we constantly keep paying. Like
yeah.
it needs to be done. Like it's almost like someone being blackmailed for something and you're constantly having to pay. Like something needs to be done and it needs to be even and that's it. So
I agree. I fully agree with you, Alex. Another thing I want to know is like, let's say, hey, they get it. Where's the property taxes go to? Is it going to go to the First Nations, or is it going to keep going like that? These are things that need to be set. And yeah, we can't just be keep giving. It's kind of like, hey, we all know what happened. It was not right. And we all 99% of Canadians all agree with that. Yes, there's bad people out there that are crazy, but again, we all just want to come together.
yeah, and then how this is going to affect this Musqueam, if you guys look at the map, this covers that Cowichan land claim area. So it looks like the Musqueam is challenging the Cowichan land claim as well. And I'm hearing the Squamish First Nation is also going to challenge each other's rulings. So you know what? In the meantime, this is all going to be tied up in court and all that stuff. In the meantime, looks like a lot of businesses are not going to even invest in the lower mainland. Businesses in BC, I mean, when it comes to our property values, it could affect it when it comes to the appraisals and all that stuff. Right now, this is just more what's happening. I don't know. This about wraps it up. Alex, what do we got going on this weekend here?
I'm gonna just be hanging out, hoping that the weather stays nice. Might go for a bike ride or something out there that way. But yeah, nothing too crazy. You got stuff on the go?
Nothing at all. Just relaxing for the weekend and we're binge watching a show called Dexter right now. So
I watched like the first 2 seasons way back in the day. I haven't watched in a long time.
yeah, and they've got 8 seasons, but we got notice from Netflix that they're taking it off of Netflix at the end of this month, March 30th.
Oh shit!
So we got to freaking power through it. We're watching like 4 or 5 episodes a day
Yeah.
and such, but it's a good show. But yeah, folks, thanks for tuning in. If you have any questions, comments, or feedback, we'd love to hear it. If you like this episode or like this pod, please like, share, and subscribe, and please share it with a friend or family member who would love to hear about this. On behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in to episode 79 of the Canadian Mortgage Show. We'll see you next time.
See ya. Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.